My name is Megan Edwards of Focus Communications, and today we're getting the latest updates from Kuya Silver, which trades on the Canadian Stock Exchange under the symbol KUYA. Joining me once again is Kuya's President and CEO, David Stein. David, thanks for coming on the show today.
Thanks. Good morning, Megan.
So for our listeners who are new to the Kuya story, could you please give us a brief introduction to the company?
Sure. The elevator pitch is that we're the newest silver producer. We have two assets, but our flagship asset's really the Bethania silver mine in Peru, where we just recently started silver production. We're currently ramping that up over the next year. We expect to become a meaningful silver producer, which, we can talk about how big later, but there's huge exploration potential as well. So, we've decided to take more of a production-focused approach to the asset, which is a little bit different than most juniors. We've got a huge exploration upside that we're going to be tapping into mostly or entirely through cash flow. So it's a great growth story that we think investors should be exposed to over the next several years. We do have a second asset in Northern Ontario as well, where we're making great high-grade silver cobalt discoveries, and that's an exciting part of our story too that gets very little value.
So Kuya's in a unique position where this year you've recently entered into the production phase of Bethania, while the price of silver trades near multi-year highs. As a former analyst, can you speak to the opportunity of being a producer in what seems to be a narrow space?
Yeah, I think, I was a former analyst, and I, covered companies such as First Majestic, Fortuna, and others in their early days. And to be honest, these are companies that, reached multi-billion-dollar valuations, or in some cases still have them today. And they looked a lot like Kuya did, 10, 15 years ago. One asset, high-grade silver, something that's low capex or capex, low intensity on capex, so something that can be funded without, massive dilution. That's a huge problem for, big copper and gold mines out there. So silver's got a really unique space where, these high-grade silver mines can really build an organic growth story. And then, of course, once you get the valuation and the multiple, you can also go out and start buying things as well, which, First Majestic and others have done very successfully. So that's really the story. I think we have a unique story to tell the market as Kuya. We've got the production angle, and we've got the exploration side. Our exploration is really significant. We're looking at something that could massively grow our asset, but we're going to be, as I mentioned earlier, we're going to be mostly doing that out of cash flow from the mine. So again, it's actually better for shareholders in the longer run. The fact that we will, once we get the mine ramped up, or even before, once we start making, significant cash flow from the mine, we'll have our own sort of future in our own hands, instead of always having to rely on the markets for that.
So why do you think you see such a tremendous valuation gap in the silver miner space, moving from negative to positive EBITDA?
Well, first of all, there's so few companies out there that, the investors, let's face it, the majority investors out there, they're probably not watching this video right now. They are generalists who have no idea what, a 3-meter, 1,000-gram drill hole is worth, or if it is valuable, or if it's good, or if it's bad. But people understand earnings, cash flow. EBITDA is a great, a very well liked, sort of proxy for cash flow, especially in the resources space, oil and gas and mining. It's used quite a lot. So before you look at the actual positive versus versus negative EBITDA, you need to just imagine, generalists coming into the space are going to be wanting producers. Okay, they're going to be because they can understand that. Okay, they have no idea what a size and grade of a resource is, whether it's leachable or not. Like they don't care. They don't want to know all that. They don't want to go to do a 4-year bachelor's degree just to buy a stock. We'll make it easy for them by being one of these producers. Once you get into production, then the numbers kind of don't lie, right? You're either making money or you're not. You're either good at running mines or you're not. Here's a case where there's only 10 silver miners, and these are guys who produce more than 50% of their revenue from silver. So they're truly giving investors exposure to silver here versus byproducts. And you can see the multiples vary quite substantially, but there's definitely a big jump once you get into profitability here. And I'm not talking about EPS profitability, EBITDA. I'm talking about EBITDA profitability. So basically, positive cash flow, for lack of a better term. And once you get into that space, the valuation jumps up quite a bit. At least in this small group that we have to sample, which is the 10 silver producers out there. Why is that? Well, obviously a company that's making money is way less risky and doesn't have to keep going back to the market. So that's, I think, first and foremost in investors' minds, the biggest risk that they feel they have right now because of this big bear market that we've been through is financial risk. Okay. Am I going to continually keep getting diluted by this company, or can they start to do other things with their cash? And even, pay dividends and buy back stock ultimately. Like the companies that make a lot of money, you will see them doing that. And some of them are already doing that, at least in the gold space. So that's the reason why there's such a big jump. I wouldn't be surprised to see that continue until we get into more of a frothy market. But that, and then these multiples will probably, sort of collide together a little bit. But we're years and years away from that happening.
So this year you've just started production, so it's hard to pinpoint exactly where Kuya can land here. But based on your PEA and production at 350 tons per day, where exactly do you expect Kuya to land on this chart?
Yeah, we have the stars on here for that reason. And again, it is a PEA. We have changed our strategy since the PEA. So there's some important caveats, and I would encourage everyone who wants to dig into this to read our technical disclosure carefully. But we're the production rate has not changed. We're looking at ramping up to 350 tons per day. And then based on, the average grade that we get, we should be, well over maybe approaching 1.5 million ounces per year equivalent of silver at that run rate. And based on the types of, margins that we're expecting, even with toll milling, which is going to cost us a bit more, we think we can, make around $20 million a year at that run rate. And that's why the star is there at 20 million. So it shows you in this chart that what our value would be if we get the lowest multiple of our peers, which is 8 times right now. And then if we get the average multiple, and there's a big difference between those two, 8 times, you're still looking at 160 million valuation. These are US dollars, by the way. And at the average of our peers, it's much, much higher than that. You're looking in the many hundreds of millions. Now, why would a company be worth that? Is that even possible? Well, if you give investors the growth they're looking for through exploration and through production increases, then they will pay more. They will pay more because you're giving them growth, and they believe in that. They believe management can deliver on that growth, and also because there are so few alternatives, they're going to push those multiples up just because of that crowding effect. So that's what we see when you see a company that's trading at 70 or 80 times, which you can see there's there's maybe 2 of those on this chart. One of the reasons is because investors are already pricing in some future growth there that there may not be delivering, or they didn't deliver on last year, because this is based on last year's financials. So that's how a company like Kuya could get into the many hundreds of millions just with Bethania alone, let alone anything else we do with Silver Kings or any other assets.
So to summarize things, can you quickly discuss what excites you about the Kuya opportunity?
Sure. I mean, the fact that we're in production really just makes us unique. You saw in the last chart, there's very few companies out there, and we really, in my opinion, and as an analyst and someone who's been in the mining capital markets now for over 20 years, we have not seen a true bull market for precious metals. I mean, since Kuya's been a public company, so that's coming. Gold's hitting all-time highs. Silver, usually follows that. And again, there's going to be a lot of investors looking at silver, for the first time or looking at it again. They're going to be crowding into a few names. They're going to have a strong preference towards producers over explorers, and we're going to be one of those companies that can give them that. The Lassonde curve here is although it works for all commodities, I think it's especially good for us with a mine going into production. That's Bethania. That's when a lot of value is created for the reasons we already talked about. And then also when a discovery is made and you start putting meat on the bone on a new discovery, that's when also a lot of value can be created. We've got two assets right there at the sweet spot of the Lassonde curve, the two sweet spots, and we're able to continue to deliver news into the market here over the fall and into 2025. Positive news, I think, that will cause or encourage investors to kind of re-rate us higher as we deliver.
Thank you so much for your time today, David. We're looking forward to having you back on with additional updates very soon.
Thanks for having me. And remember, you can go to our website and find the full presentation there. Thanks again.
Thank you.